Welcome to another Straight Up Chicago Tuesday tip. I'm 𝗤𝗃𝗃𝗀. With me is Mark Ainley. Also with us, Eric Workman over at 𝗦𝘃𝗶𝗶𝗵𝘁. Eric's been gracious enough to join us last time, and we're back again to answer another question from our viewers. So today's question, besides the typical, what is the rate, what are the terms, what are some other items I should inquire about when evaluating my lender?
Well, thanks for having me on again, guys. Appreciate it. Always love talking to you both and talking to all the listeners out there. Really good question. And I would answer it. I'd answer it in the same way I think that Mark would probably answer it. You know, other than how much do you charge per door? What else should I be looking for in a property manager? Or other than dollars per hour, what else should I be looking for from my general contractor? Or other than my annual premium, what else should I be looking for from my insurance agent? The key to, I think, most things in business is value, right? The old moniker of you get what you pay for is true. And it kind of carries through time for a reason. So look, I think with any service provider that you have, what you're getting for your money and what ancillary benefits you can get out of that relationship is of the utmost importance. You know, I mean, I would pay more per door to have GC manage my properties because they're doing more for me in a global sense from a business standpoint with connections, relationships, et cetera, than just managing my properties. And at 𝗦𝘃𝗶𝗵𝗵, we really try to do the same thing. I'm not trying to make this a commercial about 𝗦𝘃𝗶𝗵, but if you're shopping lenders, really, I think what you should be shopping is value. And what else do you get from them other than money? And if the answer is not very much, then their price has to be a lot lower than everyone else's. And look, and maybe this is me, buying my own dog food, but in almost all cases, I am the most expensive option. When you're talking about rate and points, I rarely ever win on price. I actually don't know that I ever have won on price. What we try to do here is just bring substantially more value to the client experience as it relates to, your real estate business and bring things other than money. The draw process that we have here is, I think, world-class. Any investor worth their salt who's done a number of projects will know that, you go with a bank and you wait 6 weeks for a draw to get processed through a title company. It just murders your cash flow. It murders your float, and it extends the project, potentially months. Whereas, a draw with us will take 24 or 48 hours. A track record of being able to close. I mean, I can't even count anymore the number of deals that we've gotten because, one lender promised that they could do it and then backed out. And in the 11th hour, we have to swoop in and close. So we have a 10-day closing commitment. And I think everybody in Chicago knows that if 𝗦𝘃𝗶𝗵 says they're going to close, that the deal closes. And then beyond that, it's really about relationships. When I think about my most successful clients and the most successful people that I do business with, the network is very commingled. I mentioned this in a sales meeting the other day that the real estate market is massive and the industry is very small, right? The industry is very small. But when you're a lender, we talked about this in our last Tuesday tip. I've got 85% of the money in the deal. You've got 15% of the money in the deal. And if the only thing I care about is getting my money back, well, that's a weird dynamic from a relationship standpoint. So I get very involved and invested in my client's success and whether they need, a good broker, whether they need a good property manager, whether they need a better attorney, accountant, even just in their personal life. Like there's a tremendous amount of relationship and network building that I do on a daily basis too, that if your lender is not doing anything like that for you, reevaluate the cost. The last thing I would say is, I think we would all agree that real estate is local. You get a lot of people who will, whether it's in forums or online or what have you, they tout, investing in outside your market or in these other places. And it's a very difficult thing to pull off, unless you have an extraordinarily good team that's local. And so your lender is part of that team, and their local knowledge, their network of appraisers, how they interact with the city, who they know, what type of navigation that they can help you with through permit processes and those kind of things. Local knowledge is key. It's huge. We've got a lot of different lenders who have come into Chicago and then who have pulled out, not lending here anymore. And a lot of it has to do with just not understanding where they were lending, not understanding who they were lending to, or not being able to actually help their clients out of problems. So I think value, local knowledge would be the most important things.
Awesome. So you kind of preface that with customer experience, which can be a fairly generic term, but really for a borrower, an investor here in this case, what you're really looking for is someone that has a track record for closing quick, can knock out draws quicker, faster. I think many of us have been in the situation where your job just comes to a halt because you need that 18 grand out of pocket back before you could give the next guy his down payment. A lot of what I think the finance industry is built on is doing what you say and saying what you do. So making sure you're hiring somebody that can follow through with that. And finding someone that, I was hired a couple of weeks ago. They said, you are a hire, but I'm signing up for your network. And I think in a finance relationship, that's similar. I think when I refer someone like you out, Eric, it's always, listen, he's a good guy to know in Chicago real estate, period. So not only to know you, but then to do business with you, that's a win. So, and local knowledge, I think there's a lot of nationwide companies that do the finance piece, but they have no clue about what happens as far as the boots on the ground go here. So all those things are really important, and actually can add up to definitely outweigh any price differences when it comes to pricing out a loan, when it comes to percentage or rates. So that I kind of hit that. Did I summarize that back correctly? And Tom, any thoughts?
I'll just back it up. Like, a perfect example, we purchased a building. It was $600K purchase, cash, no contingencies, had to close in 2 weeks. And I put $30K down hard. Like that's a trust factor there, right? Like, you don't do that with someone that's not going to come through for you.
Yeah.
And for our listeners, maybe you shouldn't do that anyways. That's it's a little aggressive, but that's the trust factor of this is going to get done, right? Like, you pay for that peace of mind.
Yep. So
you're able to get more aggressive in your approach for acquisitions.
Huge value in peace of mind, and not take that takes a layer of risk off of the deal overall. So, guys, that was awesome. Tom, Eric, thank you for doing this again. Join us every Thursday for our shows. Make sure you're referring us out for our weekly podcast, and make sure you join in on our ongoing every other Tuesday tip here. So, thank you guys, and we'll talk to you soon.
Thanks all.
Guys.